Our guest, though, is a long-time bull on tech. Let's find out if he's been lightening up his positions. Ross Gerber joins us now, President and CEO of Gerber Kawasaki Wealth and Investment Management. Ross, always great to see you, and thanks for joining us. Is the rally over for big tech? Are the good times behind us?
No, definitely not. I think it's about time a little sanity came back into the stock market, because obviously we've owned these big tech stocks my whole career. Actually, I was just joking that, I used to buy the same stocks in the 90s when I was a kid that I'm buying today, like Oracle and Dell and Microsoft, for example. In the dot-com boom, these were amazing stocks. And so we're just at the beginning of where AI is going, but valuations got a little extended. And so this is actually very, very healthy and part of a good bull market.
Now, you have this advisor shares Gerber Kawasaki ETF, trades in New York under the symbol GK. And NVIDIA, last I heard, was the biggest holding, then Microsoft, then MGM Resorts. But its focus is tech, or what is the mandate of that ETF?
Well, really, we're a growth portfolio of innovative companies that are not only just in technology, but in consumer products that we like. Communication services is another sector, healthcare, and real estate. So we're a diversified fund, and that's really what we focus on. But tech is our largest allocation. It always has been at my firm and throughout my career, because technology is the best thing we do here in America. Innovation that we're seeing today is the best innovation we've seen in technology in many, many years. Mm-hmm. And so as we enter this next phase of growth, technology will continue to lead the way.
Just looking at GK, over the past year, total return of about 18%. So it has lagged the NASDAQ 100. It's about 30%. But of course, it's very hard to match an index that's shooting up.
Well, also, we compare to the S&P more than to the NASDAQ, which is much more heavily weighted and concentrated than our portfolio. So we look to have less volatility than the NASDAQ and be more correlated to the S&P. Although I still feel the S&P is now so heavily weighted in a few stocks as well. So if you compare us to the equal weighted S&P, we're destroying it. But in general, we are very happy with our results over the last year and 2 years.
Tell us, so your thesis on tech, I mean, we should note, it's not a new point, that a lot of these tech giants are making plenty of money. It's not like they're just on a wing and a prayer and hopes for the future.
In fact, they're making more money than ever, and that's why we're seeing them reach all-time highs. But I think the valuation, the price-earnings ratios got stretched. Traditionally for companies like Apple that trade around 20 times earnings, with about a 10% growth rate, now is trading at 30 times earnings. And so, as I said, these are healthy pullbacks from a very, very high value big companies. So, it's very hard to turn a $2 trillion company into a $4 trillion company versus smaller and mid caps.
What about Netflix? We're expecting their numbers today. Is that a stock that interests you these days?
Well, Netflix is also one of our top holdings, and I love Netflix right now. They are just killing it. The content just continues to drop. Great shows, one after the next. We really look at it as a two-horse race now in streaming between Disney, Hulu, and Netflix. But Netflix, their ad-supported business is booming, and it was really a great move for them to deal with the sharing of accounts, and then adding this ad tier has been incredibly profitable. And the ads on Netflix are very effective. People are very engaged when they're watching shows. But Netflix has also built a great kids business too. The kids used to all flock to Disney to watch everything, and now we're seeing a lot more kids watching Netflix. So they just continue to fire on all cylinders.
That's interesting because the kids' TV business has been tough for a long time, I think, with kids moving to screens and YouTube.
Right, YouTube.
Tesla, what's your view there?
Well, we still own Tesla. It's a position in our firm, and in my fund, it's about a 1% position in our firm. It's closer to 2%. And we like Tesla, especially they were talking about like battery storage and charging, which are great businesses. But right now, they seem to have taken their eye off the ball and selling electric vehicles, and that's really been hurting Tesla and their margins. So as much as we're bullish on Tesla on the long term, we're concerned about this pivot to Robotaxi, because I don't love that business as much as I love selling cars.
That's interesting, yeah, because there has been skepticism about the Robotaxi. I think some analysts have said it's a distraction.
I don't know if it's a distraction, but I think Tesla makes the majority of their revenue, I think it's 90% or more, from selling vehicles. And selling vehicles at a profit is what Tesla needs to be focused on. And people want to buy Teslas because they're still the best electric vehicles in the market by a long shot. So they've got real competition now with Hyundai and Rivian and many others, BMW and many others, and they just need to focus on selling vehicles. And instead, Elon's really moved over into autonomy and robotics and all these businesses that on the long term might be great, but over the next several years have no prospects of making profits. So this is a transitionary period for Tesla, and it could be a long and painful one, possibly.
What about the semiconductors? I know it's a very diverse group, but is the magic going to continue there, do you think?
Well, we own a lot of semiconductor stocks, and the way I look at it is chips are the brain cells of AI, starting with NVIDIA, but also with many other players, as well as building chip factories has been a main policy goal of the United States. And we're seeing a tremendous level of investment into building chip factories and capacity here in the United States. So this is actually really, really good time, because essentially every data center in the world needs to be upgraded with new chips. And that's basically what it is the first part of this AI build out is hardware. And then as the hardware gets better, we'll see more software applications and business applications and efficiency and productivity from this. But right now we're just in the build out stage. Chips are the brain cells. We need lots of brain cells. And this is going to go on for many, many years.
Do you really think it'll make much of a difference, say, for consumer-facing companies? I'm not looking forward to having to deal with AI bots. I want to talk to a person, but of course I'm old school.
No, you're not old school. I think people want to deal with people, and I'm not giving up, ordering from a waiter or waitress and things like that. I even actually want to continue to drive my own car. I have no intention of having some robot drive me around. But that said, I think when you talk about things like ordering food at a fast food restaurant, when you go through the drive-through, whether that's an AI voice or a human, you're not even going to be able to tell the difference. And that's already happening. When you're talking about, for me, I use it for research now every day. When I look up and search things anymore, I don't use Google anymore. I use chat. It's wonderful for efficiency if you're in law. Or, for example, I have an accounting firm as part of my firm, and we were just talking about, hey, should we sign up for a research thing? And I was like, no, just put it in to chat, whatever accounting questions you have. And quite frankly, it's really good at this stuff. So it's already improved, not to mention meeting notes on our Zoom calls for all of our clients. It's the efficiency for our business has been amazing, and it's only just the beginning. So I think there's many areas that you won't even see where your experience with companies will improve, but the behind it is a new technology that is much smarter than the technology we've been using in the past.
And when you say chat, you mean ChatGPT, Ross? Right.
Yes, correct.
Right.